and I'm the one dividing them. So it's clearly they are representing in certain aspects a different position on the tax solidarity. As an introduction, a bit of information about what we are ahead of. On this Wednesday, the multilateral convention on base erosion and profit sharing shifting is going to be signed, and it is one of major steps. It might be one of the major steps in achieving a tax solidarity, and this is very much the basic question that the whole panel is going to be about. Is the rising number of international regulations is bringing us closer to achieving the tax solidarity, what actually tax solidarity is? And do we need perhaps an international body that will take a leading role, international in terms of multinational, not G20, OECD oriented by the United Nations oriented, that we will take the leading role in shaping the more coherent tax environment in the world? Or do we need more transparency and just obeying the rules? Or do we need both of them? Professor?
Right, you've asked a very large number of questions there, so let me try and break some of them out. First of all, can I say to the organizers of the European Financial Congress, thank you very, very much indeed for inviting me here. I've never been to Gdansk before, and it's a fascinating place to visit, and I'm very delighted to be back in Poland again. You started by mentioning the multilateral instruments, and I think it's probably helpful to those attending just to explain a little word about that, because I'm certain the newspapers on Thursday morning will all be about the signing of the multilateral instrument on tax matters in Paris, and everyone will think, is this tax peace in our time?
Big breakthrough.
Big coverage of the newspapers. What's it all about? Well, it's one of the implementations of the OECD's BEPS project. BEPS, base erosion and profit shifting. It's the project that the OECD governments and an extended G20 participation, they've been involved in for the last 4 years in order to challenge multinational corporations to stop activities of aggressive tax planning. And right from the beginning, they appreciated that one of the changes that would be needed would be a change to bilateral tax treaties. All countries, virtually all countries, have a network of bilateral tax treaties. If you change them treaty by treaty, you negotiate protocol by protocol, it takes years, decades to make the change. So they came up with the idea of a single streamlined treaty to amend large numbers of bilateral treaties at the same time.
Like a cap, on changing all the treaties.
A cap, I don't know about a cap. It's a streamlined method to change many treaties at the same time. I'll take a little bit of personal pride here, because 15 years ago, at the request of the then head of the tax department at the OECD, I and 2 colleagues wrote an article suggesting this idea. So on Wednesday, it's a little bit like me seeing my son or my daughter getting married, because it's an idea 15 years ago which is finally coming to fruition. So it's going to change a large number of bilateral treaties. Will we wake up on Thursday morning to find that the world is a completely different place? No. But in a number of respects, international tax relations will have been amended. Now, that was the first point that you raised. You raised lots of other points, but I don't want to hog the conversation. Okay. Let's bring others
just one more additional question, because the wedding of the child is not always a happy day. It usually is.
Quite frankly, when my children get married, I will be delighted.
And in this very case, on this Wednesday, will you be celebrating? Do you think that it is the move into the right direction?
Well, I'm still waiting for my invitation to go to Paris for Wednesday. They've got more than 60 governments anticipated to be there, and I know that they're actually finding difficulty finding enough space for every government delegation. But yes, I think maybe on Wednesday night I shall open a little bottle of champagne to see the final ending of a project that I was involved in originally 15 years ago. As to whether, yes, again, the analogy with children is interesting, because as your children grow up, they don't always reflect exactly what you'd hoped that they were going to be. And if you were to ask me, is everything in the multilateral instrument exactly as I would like it to be, the answer is probably no. Let me give you an example. One of the changes that came out of the BEPS project, which is a minimum standard, is a standard on countering tax treaty abuse. I don't oppose that at all. I think it's a good idea to stop abuse of tax treaties. Markus would jump at me if I disagreed with it. But the method that's been chosen as the principal method to introduce something called the principal purpose test, which was a rule developed by the tax authorities in my own country, in the UK, is not, I think, a very good test. It's a very vague test, and one that's going to give rise to real problems in practice. So that's one of the elements of the MLI that I'm not 100% happy about. But I don't know whether Markus likes it more or less than me.
Markus, will you open the bottle of champagne on Wednesday evening?
I think rather not. That might be another opportunity when I'll do that. But let me first please also thank the organizers of the event for the kind invitation. Dziękuję bardzo. It's a great pleasure and honor to be here, really. I would like to widen the horizon a bit because the multilateral instrument really is just one piece in the broader rolling out of the OECD's BEPS agenda that purportedly was brought into life in 2012-13 on the call by the G20 to better align the rights to tax with economic activity, which we all know in the last decades has become misaligned to a large degree. And here I have my concerns that the BEPS project by the OECD has to a large extent failed. And what we see through the 15 action plans, the complexity in the international tax world will increase even more than it is a case right now. The toolbox approach means there is very little consensus, very little harmonization in the approaches. So we just add one layer of additional complexity there, which in the end will mean that even more resources are absorbed in the tax departments of multinationals and of tax administrations alike, which is not efficient and which again shows the dysfunctionality of our current international tax rules. This will lead to an exacerbation of tax conflicts over the rights to tax. We already see that the backlog of cases of mutual agreement procedure cases where two governments negotiate because they cannot agree on a double taxation dispute increases year by year. There's many thousands cases open right now, and many experts expect a tsunami of new MAP cases because of the conflicts over taxation rights will exacerbate as a result of the rejection of the BEPS project to tackle its fundamental flaw, which is the arm's length principle, the imagination, the illusion really, that businesses in a multinational company trade with each other as if they were independent parties. And last but not least, the last flaw of the BEPS project really is the complete absence of transparency, accountability over its results. The OECD said itself in Action Plan 11 that at the moment we do not have robust enough global data that would allow us year by year to monitor if the misalignment, the tax avoidance problem, is being tackled effectively, so the overall misalignment reduces, or if it is still growing. So as long as the OECD rejects, for instance, the country-by-country reporting data being made public, we have no tool at our hands to evaluate the effectiveness. So having a reform package that has been discussed a lot of energy has been devoted to, which increases complexity, which increases conflicts, but the evaluation of its effectiveness is not possible independently, is not what I understand as an effective tool. And therefore, the multilateral instrument signing is maybe in itself, it's a good addition for those countries who already have double tax treaties. I'm pretty much in favor of countries signing those if they already have double tax treaties, but it is not tackling the more fundamental issues, the ABC of tax transparency that we would be calling for, that need to be tackled, which is much more effective or much more promising for tackling, for delivering tax solidarity in Europe and in the world.
And so coming back to these, because you said that we are still not solving the basic issues. Coming back to basics, what are the basics challenges for the tax solidarity, and what, in your view, the tax solidarity is?
I think, for instance, some studies that we have carried out on the economic data that is available on multinational taxation reveals that there is a great misalignment. For instance, US multinationals, we have analyzed Bureau of Economic Analysis data last year for the year 2012, and there we have seen that Poland, Hungary, and Czech Republic alone are losing more than $6 billion in tax base due to the tax avoidance by US multinationals alone, because the profits are declared in a way that is not aligned with economic underlying activity. And that is the key problem. We have a divergence between the profits booked, which are often booked in tax havens, and the actual economic activity that gives rise to those profits. And tax solidarity, in that sense, a very important pillar, at least, of this would be in refraining from poaching the tax base of your neighbors, which at the moment is not happening because we have these misalignments, very widespread, very deeply in the economic fabric of our international tax system. And we lack the data to make such studies, as I just quoted, for all economic sectors, not just for US multinationals with patchy data, because it is aggregate, it's not multinational by multinational. And that is something where, for instance, the German government is vehemently opposed to, and where I would very much hope also Eastern European nations standing up against the German government to demand, actually, we need to be much more public and transparent about that, because it's actually tax is lost to Eastern European nations. That is at stake here.
What is tax solidarity?
I'm not certain I know what tax solidarity is. I came to Gdansk, to the home of solidarity, to try to understand what it is. I understand tax coordination. I understand the idea that for over 100 years, countries have met together in international fora to coordinate their tax systems. But they've always done so against a background of tax sovereignty, that it's for each government to decide what it's going to tax, whether it needs taxes at all, and the level of taxes. The idea that somehow one has to move to a system where Poland is dictated to as to which taxes it has and what level of taxes it has. You have that to a certain extent in the indirect tax field in value-added tax, where VAT is a European tax and there's a band of acceptable rates. But the idea that Poland should be dictated to as to the maximum level of corporate tax or the minimum level of tax does undermine a very traditional approach of sovereignty. And I don't think that the OECD, through the BEPS project, intended to undermine. If anything, I think they wanted to protect the idea of the sovereignty of states on tax matters. If you accept that sovereignty, then you have to accept that countries can compete with one another. They can reduce their tax rates. They can even have a zero tax rate if they think that that's appropriate and it works in their country. For the last 20 years, the focus has been on identifying harmful tax competition, regimes that went beyond what was acceptable competition. And the BEPS project was, in a sense, a development of that, to try to eliminate harmful tax regimes. Now, if you were to ask me the question, has the BEPS project, base erosion profit shifting, the OECD work over the last 5 years, has it been successful? I would probably agree with Markus for different reasons that I don't think it has been successful. And the reason was because the OECD was not entirely truthful in what they were really targeting. If you think back to what started this, it was information coming out through the British Parliament, the US Congress, the European Parliament, about the tax activities of certain multinationals. Google, Amazon, Starbucks in the UK. One of the things that links all those companies together is that they are all US-based multinationals. And underlying BEPS was really the need for US tax reform. And if you look at some of the aspects of BEPS, action item 2, hybrids. Where is the biggest problem with hybrids? It's the American check-the-box rule. Action 3, controlled foreign corporations. What's the real problem there? The US has turned off its controlled foreign corporation subpart F legislation. And I think everyone was really hoping that the BEPS project would end up producing the right type of US tax reform. Now, that couldn't happen under Obama because you had a Democrat in the White House and Republicans in the Senate. It might happen under Trump, because in theory you have Republicans in both sides, but we still wait to see what the US tax reform may be. That, I think, by the way, is probably going to be one of the most important developments in tax this year, overshadowing our little MLI ceremony on Wednesday. But as to tax solidarity, I can see the idea of coordination of tax policies continuing, but whether it goes beyond that, I'm not so certain.
And how one would draw the line deciding what is abuse of the international standards? Where do you put this line? How do you set up the rules, and how they should be, in your opinion, set up? Do you think that we need a change in the approach to the tax legislation globally? There is an idea of involving United Nations more in the tax creation.
It's not for me or for Markus or Tax Justice Network to decide where you draw the line. It's for the international community. And the harmful tax competition project of the OECD was about that. BEPS was about that as well. I'm not certain that it's actually been able to achieve the result. And one of the problems, and I'm certain this is something upon which Markus and I would agree, is actually because it's the wrong organization that's taking the lead, the OECD. People here in the audience may have asked themselves the question, why is the OECD, which is an organization of 35 members, why does it lead the world on international tax policy? Why is it the leading organization? And the answer is a historical accident. Between the two world wars, the body that started international coordination on tax was the League of Nations. And Poland, for example, was quite active in the work of the League between the two world wars. After the Second World War, the United Nations began that work with a commission on taxation, but it ran into arguments, debates over the Cold War. And in 1954, the UN closed down a number of its functional commissions, including the one on tax. There was then a gap. And in the gap, a nice gentleman from Switzerland wrote to a nice gentleman from the Netherlands and said, we need somebody who leads on tax. And there is this new body in Paris called at the time the OEEC, became the OECD. Why don't we ask them if they're interested? And for 50 years, after the late 1950s, the OECD became the leading body there. Those conditions have ended. And it's time for the OECD to pass the work to a much broader body that represents all governments together.
United Nations.
Sorry?
United Nations.
It has to be the United Nations. There are three problems there. There's a problem with the OECD carrying on because at root it is a member organization of 35 countries. They have been involved in outreach programs, in enhanced cooperation, in bringing in other countries, but at the end of the day, it is not an organization of all those countries. It is an organization of 35 members. The UN is desperately under-resourced on the tax field. The resources go to the OECD, they don't go to the UN. And also, OECD countries, like my own, like the UK, have an interest in preserving the status quo, because you have much more influence as one country among 35 than one country amongst, 198. But, last comment, and I'll pass back to Markus there, but in the tax field, we cannot continue just involving a small group of countries. If we are going to set international standards, everyone has to be involved in forming those standards and agreeing to adopt them. Only then, for example, will it be possible to dictate to the US, for example. The US can ignore the OECD. Trump can probably ignore the UN. He can ignore the Paris Accords. But if there's any chance of influencing a country like the US, it has to be through the UN, not through the OECD.
Thank you. You touched a very important aspect, the British issue, but we will move to this further on. The very same question about the need for the international cooperation. Should we leave the OECD and the G20 leadership in the tax creation environment and move to the broader environment?
No, I definitely agree with Philip on this one very much so. We have long been advocating for the necessary change of forum and pointed out the inequity that is currently still prevalent. And the G77 nations, year after year at the United Nations ECOSOC, demand a right at a table, at a negotiation table, and not being served food, just pictures of food, but really being part of the dinner, or to be a part of the table and eating, actually. So the OECD has launched in the last years a very sophisticated campaign to make the world believe, and the journalists unfortunately often replicate that story without double checking, that they have the inclusive framework, they have the global forum, it's all global, it's all inclusive, but if you look between the lines, what you see, the OECD is telling what is going on in that forum, and they can switch off the funding any moment if they would decide actually to change something that is not pleasant to the OECD's interests. And the OECD is traditionally a club of rich nations, which is capital exporting towards the rest of the world, whereas developing countries, G70 nations, have other interests in the definition of taxation rights. But let me, apart from that, please draw also one important subject into our attention. In order for reform to be effective, we need transparency, maybe even more than a forum change, public transparency, so that the public can evaluate year by year what is going on really. And this is what I was talking about, the ABC of tax transparency, which is the key for delivering lasting change and transformation and progress in bringing back also big income and big corporates into the tax net. The A would be automatic exchange of financial information. That is probably the one where we have been making most progress in the last years, where bank exchange data among each other, a common reporting standard. You are all familiar probably with that. And then the B would be the beneficial ownership transparency, which is transparency of data of the owners of companies, trusts, and foundations being publicly available, as is currently the case in most nations for nationally controlled companies and foundations. And C is country-by-country reporting data, where again we insist on the publicness of the data is the key for progress, because the public can hold only the politicians and multinationals to account. We have seen many instances, for instance, in Luxembourg, but also the Apple State Aid case, where governments have been complicit in illegal tax behaviors. We cannot anymore assume that there's just the government and the administration can be trusted. The ideology of tax wars, of tax competition, of needing to poach tax base from your neighbor is so strong over the last decades in our universities, in the minds of politicians.
Would that Germany experience that pretty much with Switzerland transferring taxes in Luxembourg?
And therefore we have to hold governments to account as well, and not only multinationals. And only if that data, the country-by-country data, becomes publicly available, can we ask questions, as in Luxembourg, much earlier than relying on a whistleblower to ask, oh, why is it that and that company has booked billions of profits there, but is paying only a trickle of tax? And that would change the debate. Consumers would have a choice if they see a corporation such as Amazon paying very few taxes, if I want to buy with that company or not. And this is what triggers and delivers effective change over the long haul. We are up against very powerful vested interests, and without the public, we will not succeed. And this is why I think the United Nations, if we fail to lock in public transparency into the United Nations global tax body, we will not be able to overcome that problem.
So the key issue is we are moving right now from the international cooperation, multi-governmental treaties to the question whether it is not regulations that will solve the problem. It is transparency, and the big question about transparency is whether it is not challenging the right to privacy, the right to conduct business, whether it is not challenging the safety of businesses.
Yep. Can I answer that? I think this is where Markus and I are going to disagree, and Marek, you may need to hold us apart from one another, because whilst I recognize a role for transparency, and I certainly recognize the right of government officials to access data in order to correctly assess tax, I do not recognize the general right of the public to know all about an individual or even necessarily a corporate's financial
Nobody's
affairs.
asking for that.
Let me finish that there. There is a right to privacy. In Europe, it's recognized in the European Convention on Human Rights and in the Charter on Fundamental Freedoms. There has to be a balance between openness on the one hand and privacy on the other hand there. And I think those who simply ask for unrestricted transparency about the affairs of companies, for example, are not necessarily recognizing that balance. Now, take, for example, country-by-country reporting, where large multinationals are required for government purposes to provide information to governments about their tax affairs, so that can be used as a risk assessment measure by tax authorities to see why they are getting the amount of tax they're getting or not more tax. Whether that should be made more publicly available depends partly upon people like yourself, Marek. Journalists and others, are you going to be prepared to really look at the detail of tax rules as to why a company appears to be booking profits in one place rather than another. I suspect that what will happen is simply a sort of knee-jerk reaction.
A witch hunt for the companies that are like pointing with the finger and saying they are not paying taxes.
We had an example of it, I think, just now, actually, because I think I heard Markus to say that in the Apple case, the government was concerned, the government of Ireland was concerned with assisting in aggressive tax planning. Now, I have to declare an interest here. As a Queen's Counsel, I act both for governments and for private taxpayers, and I'm part of the Irish government legal team. On this particular matter, the Irish government followed its own rules and gave no special tax treatment to the company whatsoever. And I have to say, one of the things I find interesting in Poland is I am horrified that Poland is the only government, as far as I'm aware, that has announced that is intending to participate in the Apple case on the side of the European Commission. I think you need to ask your own ministry, what are they doing? Don't they understand what the case is about? Why are they on the wrong side of that particular case? But that's an example where a body like Tax Justice Network, not perhaps looking at the full detail, suggests that there has been complicity, whereas if you look at the full detail, you will discover that the government concerned had no complicity in alleged state aid. Yeah. Well,
but the state of play is, under current legal situation, is that the Commission has ruled that this was illegal state aid. This implies misbehavior, illegal behavior by the Irish government, by the Luxembourgish government, by a number of other governments, and there's many more investigations to be completed.
But they're all before
and we
the
have
European
we have to wait before the contrary is
they're
proven.
all before the court.
Yeah, they're
the government's concerned.
Yeah.
Every government and every company concerned is challenging the European Commission. And as far as I'm aware, at the moment, the only government that appears to be supporting the Commission, at least in the Apple case, is the Polish government, which I find very surprising.
Well, I think we have to, for instance, come back to this specific case. It needs to be weighted. If it was indeed decided that there was no misbehavior, I think this calls much the more fundamentally for an overhaul of the European treaties. What Mr. Fischer said initially, this clearly cannot be right if we have a framework in the European Union law that allows discretionary tax choices handed out discreetly to individual companies on how they deal with their tax affairs, implying 13 billion of tax losses, not only European Union nations, but also developing countries. This was explicitly mentioned by Ms. Vestager when she pronounced her judgment. So it's African nations, it's all other nations which are harmed through European Union rules in that context, and we have to get rid of those contexts if we want to be serious about solidarity in Europe again. And the other thing I want to highlight on country-by-country reporting, the usefulness of which I very much defend, we have that kind of disclosure already for the banking sector. You will all know that Capital Requirements Directive number 4, Article 89, requires since 2015, 14 partially, 15 fully, to disclose country by country the profits made by banks, the turnover and the employee numbers per country. And for instance, a few weeks ago, we saw a report published that revealed that into the largest 20 biggest European banks, and it revealed that, for instance, 600 million euros of profits was booked in countries without any employee whatsoever. As long as such examples exist, we know we are not there yet. And despite politicians wanting to explain to us the contrary is true, and Luxembourg had in that same study 4.9 billion euros of profits booked by the 20 largest European banks. That is more than the UK, Swedish and German profits combined. Something is clearly not right, and that data allows us to evaluate it and to hold the governments and the politicians to account for their actions or failure to act.
A transparency showing to the public the erosion of the tax system, the clear violation of the rules will help us to achieve the tax solidarity. And to achieve such a transparency, we need the rules on reporting. We need the rules that will give the authorities better access to the businesses.
Definitely. If we compare this with major ethical progress made in the world, like abolition of slavery, abolition of apartheid, the beginning of these things was always more disclosure, more cases, more information being reported about these situations, the media picking up of stories, journalists daring to go there, report about it, data collected about slave ships, how slaves are transported. I know this analogy sounds strong indeed, but I think tax avoidance is the fundamental threat to our democracies of our age. And if we are not able to tackle that, if we are not able to counter that, we will see extremism rise its ugly head again.
Well, it's a very it sounds a bit dangerous for the business environment. The very same to disclose all the operations. Do you think that we can have some kind of the compromise between the need for transparency, the argument made by Markus about creating the world which is more transparent and in which public has the better understanding of how the taxes are being paid, with the need to protect
I again
privacy.
Make the point I made earlier. There's a big difference between disclosing your financial affairs to government officials who have the legitimate right to look at that data, analyze it, challenge the position of the company, assess it to tax, and if the company disagrees, goes to court. And on the other hand, putting everything there for the public and saying, now we have no privacy, we put everything in the public domain for the public to decide. That's not, I think, the proper way to apply a tax system there. And I cannot actually see that I find Markus's idea that somehow combating, I think you probably extend it to aggressive tax planning, putting it on the same level as combating slavery and combating apartheid. It's an important issue, but I don't think it's quite merits the total abandonment of rights to privacy and the rule of law. You are substituting the rule of the mob. In a sense, on tax matters.
I
need to intervene there. Sorry,
but Markus said that we can, Markus undermined the trust in the governments, and this is his argument that we need the transparency aimed to reach the public. Because we cannot trust the government, and that's true.
We are up against the most powerful corporate and interests that exist in our world, the big four accounting firms, the big international banks, especially US banks at the moment, and big corporates, have an immense power over our lawmakers and the rules that are set. And if we don't take the public into the boat more effectively, we will not be able to overcome that resistance. And on the approach of total or complete transparency, we are in no way advocating that personal bank account statements would be put on public record or personal tax records. Nothing of that sort. We are not in any way suggesting that this is a good idea. Scandinavian countries do it, and they fare pretty well, I would say. So it is not necessarily something that spells the end of civilization, but we are not advocating for that. We are simply saying the ownership control structures of legal entities such as shell companies, trusts and foundations that change ownership rights and that are time and time again abused for the avoidance of liability, of legal liability, including terrorist financing, including corruption cases, large-scale corruption cases, including child weapons and human trafficking across the world. These owners of these structures need to be put on public record because if you form a company in Germany, if you form a foundation in Germany and you have nothing to hide, what does it concern you? If your name is there, it is already the case in German company law. You have already your name there. It's not your address. It's not your personal address there. So kidnappers, hijackers, there's nothing that would enable them to draw any information that would help them in carrying out crimes. That's a phantom. That's a myth. That's playing with the fears of the public without substantial arguments in the back. And as regards the corporate transparency, again, this is a question of level playing field. It's a question about creating a fair competition between multinationals and local firms. We have a situation in which every nationally oriented company already puts on public record their financial statements. What do you have in financial statements? You have the profit, you have the tax you paid, you have the turnover, and you have the employees and capital assets. It's exactly the same type of information that a nationally oriented, only in one country active company already puts on public record. Why should multinationals being given that benefit, that advantage over their national competitors simply by allowing them to have consolidated accounts? It was the OECD's major success, unfortunately, in 2013 on the pressure of German and US governments to move the country-by-country reporting away from the accounting realm into the tax realm. What until then was clearly seen as accounting data belonging to the public, informing a multitude of interests, including consumers, including business partners, including investors, suddenly was exclusive information only for tax bodies. That was an attempt by German and US governments to defend their export-oriented business models because they are afraid that their companies, their corporates will end up paying tax more in Poland, in Eastern Europe, in the rest of the world where they are doing business, and at the moment not paying any tax or very little tax indeed.
You're looking at me as though you want me to come back on that.
No.
One of the difficulties I have with the Tax Justice Network is that I think sometimes they overstate. They have their hearts in the right place, but they overstate matters, and sometimes they also don't recognize some of the damage that potentially can be done. And I think the damage that can be done, you had an example, I think there, we are entering into the realm this year of the Common Reporting Standard and the exchange of masses of amounts of financial information about individual personal data between countries. That is a disaster waiting to happen because there is going to be a leak of that information, whether it is just one country or the entire system is raided potentially by organized criminals. And that's the information that will then be used in some countries, contrary to what Markus assures us, for distortion, for kidnapping. That's what the worry is in some of the countries, that if that information about who holds wealth and where they hold it is available, and it's likely to come through a breakdown in the CRS system. The idea somehow that multinationals are subject to different disclosure rules than companies operating only in one jurisdiction, I find very surprising, because if a multinational has companies in other jurisdictions, in each place they have to meet the local regulatory and disclosure requirements. So I think this is an example of Tax Justice Network, with greatest respect, overstating the position in order to try and justify a conclusion, which I think when you think about it is actually really quite dangerous.
Can I just respond on that last point about multinationals being subject to local laws for disclosing data on their subsidiaries? Yes, that is true to the extent that it is a subsidiary and not a branch. If it's a branch, there is no disclosure whatsoever normally. And we have, above all, a situation in which KPMG invested big four accounting firms advise, the big tax departments advise exactly on the location of where to put subsidiaries where there's no financial disclosure requirements available. I'm coincidentally leading the research project on a financial secrecy index and tax justice network, so we produce every 2 years data on the financial secrecy rules, a country's contribution to the global financial secrecy problem, and we analyze the disclosure rules, for instance, on accounts. And I know that there's a great number of companies and jurisdictions available where there is no disclosure requirements for the annual balance sheets, and multinationals are experts. Why do they employ dozens of hundreds of tax experts when they are not using their expertise to hide these data? Any international financial accounting standards allow them to cherry pick what to consolidate, what to put into their international accounts. The International Accounting Standards Board in 2009 decided under their segment reporting, when they developed the IFRS number 8, the standard number 8, on segment reporting, they decided not to have geographical segments mandatory. So it was not required that multinationals break down what they do on a country-by-country basis. If there's nothing to hide, why don't do it? Why don't you disclose it? If it's already there, it's decided data is already there. Why don't you just put it on public record if the data is already available?
It is very appealing what you are saying, especially over here in Poland, in Central Eastern Europe, the idea of keeping the profit, to taxate the profits made here, because it is obviously a problem. But at the very same time, I'm sticking to the transparency issue, because I think that in Poland, we saw recently, and we know very well how the knowledge about privacy, how the knowledge about financing can be used in hate campaigns, in politics, and so I think that there is a need to balance the transparency with the protection of not only a privacy, but security, understood not as a security of my home, that that it won't be my home invaded by burglars, but security of my activity on the social sphere, not to be named a foreign agent, because it is happening in certain countries.
No.
So the question is how to balance the transparency with the safety.
For us at Tax Justice Network, the general argument is, or the general link we want to make is always, as long as you do your financial matters in your own name and in your own risk, without a limitation of liability, without using accounts or structures in the name of legal entities, that's fine. You can do it in complete privacy. Nothing will be public. That's completely fine. But as soon as you resort to legal entities or legal structures that shield you potentially from liability, that is the moment where third parties are affected, and where also the third parties need to have a right to be informed, not about your private address. That will never be on public record, or your family relationship network, whatever, but about the basic facts of who is controlling and benefiting from a trust, from a legal entity, and that would be your name, that would be the birth date, or at least the month and year of birth, and the country, or at least the place of residence, the city, but not an address. It will not allow anybody to trace a door or to go there, and that is something that is widespread already in German business life. In many countries' businesses' lives, it's already widespread that you have that information. If the legal owner is the same as the beneficial owner, if I'm creating a company, I need to disclose that already online in a register, and that's fair. And there's no harm flowing from that. And this is where we draw the line. If you prefer complete privacy, then refrain from using structures that limit your liability.
We perhaps should move on, but I think that's naive in the extreme, because what you're saying is, if you want to maintain privacy and confidentiality of your tax affairs, you cannot use any entity that has limited liability. As soon as you want to use the standard structures for over 200 years for corporate investment, you have to lose that element of of confidentiality and privacy. That's just naive and unworkable. But maybe we should move on from transparency.
Well, the other thing that you touched already in this discussion is Brexit. Basically, there is a fear or at least a discussion in Europe. Well, let's face it, a fear that UK is going to become an enormous tax haven that is going to be anchored just next to the...
Yeah, you warned me that you were going to raise Brexit, and perhaps I should have said to you that you may not want to raise it because you don't necessarily want to see a grown man cry there. I agree with Joschka Fischer. I think it's an appalling result in the UK. I think that the referendum was badly timed, badly organized. Lies were told by politicians, perhaps on both sides, and it's a hugely regretful outcome. And I think it's also a very selfish outcome because I don't think people in the UK looked at the benefits that the European Union has achieved for many, many other countries elsewhere, including countries of Eastern Europe that have benefited tremendously from the expansion of the European Union. That being said, we appear to be heading down that line in the United Kingdom, even though 48% of the population and significantly larger majorities in Northern Ireland and in Scotland voted against it. What exactly will be the outcome of Brexit? I don't think anyone can tell you. I can't even tell you who's going to be my Prime Minister on Friday morning. It may be Theresa May, probably will be, but I'm not at all certain. I don't know what that means. The idea of Jeremy Corbyn, the Labour Party leader, sitting down to negotiate Brexit, when I think he is partly the person responsible for the vote to leave the European Union because he did not properly implement Labour Party policy and speak to Labour Party policy, which was to remain in the European Union. The idea of him leading the negotiations I find rather horrific. Now, on the particular question of tax policy of the UK, given that we're uncertain about Brexit, it's very hard to know what will be the tax position going forward. You ask about the UK as a tax haven. In a sense, the UK always has been a tax haven for over 100 years. We have had the status of resident non-domiciled individuals, which if you were wealthy enough and you could show that your long-term links were outside the UK, you could live in the UK paying very little tax. And we have always had also an element of corporate and partnership tax planning as well. At the moment, the current government is following a policy of having the most attractive tax regime in the G20. We presently have a 19% corporate tax rate. It's due to come down to 18%, and many people think it will come down to 17% or actually lower. Whether the UK will follow a policy of a real tax haven, that is secrecy, zero tax, whether it would go that far, I very much doubt. The UK has been active within the OECD for many years in countering tax haven activities. It would be very surprising if the UK totally shifted there. Interesting little point, and this is perhaps something that Markus might want to take up, because Tax Justice Network has focused quite a lot on tax havens. Many of the tax havens in the world are colonies or former colonies. If the UK were adopting a low tax policy, it does seem a bit strange to be competing with your own dependent territories and offshore jurisdictions there. And what might actually come out of this is a pressure on the offshore jurisdictions to fall in line at least with the sort of tax policy adopted by the United Kingdom itself.
Well, we might be entering a very dangerous environment in the world, because you mentioned the Republican ideas for the tax reform, and it seems that with the problems with the healthcare reform, it might be the only possible reachable political activity by the Trump administration might be the tax reform, and it might be a quite aggressive tax reform. So it might be that we are entering the, we had currency wars, and right now I hope that we won't, reach the tax.
Well, I touched upon U.S. tax reform. I'm not a specialist in U.S. taxation, and it does seem to me that there are two possible patterns of U.S. tax reform, always assuming that Trump does carry enough personal credibility to actually get a deal with the Republicans in Congress. One of the possibilities is simply at least on the corporate side, a reduction of the corporate tax rate down to 15 or 20%, and the introduction of a territorial system. That's essentially, I think, what US big business would like to see, and doesn't solve the underlying problems of the US corporate tax system, which is what led to BEPS in the first place. The other alternative is a much more root and branch fundamental reform of the US tax system, possibly moving to some sort of destination-based tax, which would be a qualitative shift worldwide, because you would find one country in the world adopting a very different form of corporate tax, a destination-based tax, different from the rest of the world, and there would be pressure on other countries to follow down the same line. At the present moment, it seems unlikely that the US is going to go down that fundamental reform, so I think we're more likely to end up with a rate cut, a repatriation holiday, allowing the multinationals to bring their funds back, and a territorial system which will not address the fundamental problems of the US tax system, which is what led to BEPS in the first place.
Thank you. What should be the European approach to the possible Brexit, and what should be the European Commission approach to the possibility that the danger of UK becoming a tax haven?
I think Europe has greater chances now than before to protect itself against the UK's tax haven empire, how I would call it. We call the UK the mother of all tax havens. There's a film, The Spider's Web, like the UK, City of London sitting in a center of a spider web, and all its satellite territories, British Virgin Islands, Cayman Islands, attracting, soaking its victims, its money to the center, to the core, and then recycling the funds in its investment industry across the world again. There's a film coming up in the London Frontline Club in July, if you're interested, with the title Spider's Web. So I think it's a very important matter of fact already that the UK has been playing a very harmful role in the European Union context in the fight against secrecy jurisdictions, how we prefer to call them, because the main selling point is actually secrecy, or not so much low taxes. You can employ your own taxes if you know what is going on, and that is why we are also so adamant that there is a chance to act without everybody in the boat. We don't need to wait upon global consensus. If we had country upon country reporting, and we have the leverage in the European Union to demand multinationals, no matter where they are based, in the UK or in the US, if they invest here, if they do business in the euro area, in the euro single market, we can leverage their interests in the European market to force them to disclose data. And as a matter of fact, multinationals are global, so we want global accounts, global disclosure, and not just for the European part of the pie. And this is where I think we have a lot of possibilities, and we don't need to be afraid as Europe even if Britain, in the worst of all scenarios, went down a route of tax havenry, aggressively devising tools to undermine the taxes even more aggressively of European neighbors. We can act, but maybe we need a revision of the European treaties for that, and that is a very important lesson to be learned. There is some freedom of capital. The unrestricted freedom of capital movement in the European Union has proven at court, at the highest European courts, at the highest German courts, time and time again, an obstacle against control foreign company legislations, against applying taxes on subsidiaries located in tax havens. So we might need to adjust there in order to be fully prepared, and that might be a good moment when Brexit indeed happens and it's not stopped, which one might still hope, to begin thinking in a package about Brexit and about the Macron's plan to revive Europe.
Markus, I have to say that you are the person who found the positive side to the Brexit. But if we are going to, because you mentioned that treaty changes, which is a big thing, but there is a lesser demanding action, which is the directive, the anti-money laundering directive that is being right now discussed, and what these directives should include to allow us not only to achieve the higher tax solidarity, and perhaps to protect whistleblowers, to protect and to enhance the transparency.
This is again moving more into the area of money laundering, of crime, organized crime, and of the taxation of wealthy individuals. And there, you rightly said that we have a fourth anti-money laundering directive, which is now rolled out, and where we have at least the central registers for trusts and companies mandatorily now included. The question was, and the battle was over the public access of that, and in Germany had its way. It blocked against the majority in Europe any efforts to make that mandatorily public. Now, after Panama Papers, we have realized the world, at that moment at least, collectively, we need public information about the actual owners, because there is so much fraud going on, so much dishonesty. Although they have to record the beneficial owners, who is recorded often instead is the senior manager of a company, or is a manager and not the real owner controlling it. And only by having the public access to that data, journalists, for instance, in Panama can tell, oh, that person, she's showing up 200 times as a director, but she's actually living in a favela. So how can that be? And then we can begin challenging these kind of fake realities or pre-tax realities, which cover all kinds of frauds, terrorist financing, etc. So we hope that the current negotiations, Germany will be not having its way this time, because Mr. Schäuble has again very publicly defended non-public access to those registers, and I wonder why. I wonder why would you have such an obstruction against that access when, again, for most German legal entities that are in use, for most turnover in German context, this data is already available because there are no offshore investors.
And what is the argument against the non-public access?
There's a very famous association of family businesses, very influential in Germany, and in their lobby letters they have alluded to kidnapping, and they have alluded to that mainly, and data protection in a vague term, but they have not dealt with the fact, with the empirical reality. We have analyzed the data available from the current corporate register in Germany, that more than 60% of total German turnover is already disclosing their owners. And assuming that most German legal entity businesses are legitimate enterprises and are not fronts for money laundering, then the real owner is already on display there. Only once you include an offshore owner, once you include an offshore investor, then you have the chance to not disclose your actual identity in the register, which we don't know how often it is the case. Therefore, we want a public register to have the public decide and analyze, and journalists and NGOs
who would
monitor.
run the public register?
It's a Handelsregister. It's at the moment, I think it's a private enterprise, but it's under public administration. I'm not entirely sure what a legal entity structure is for the German business register, but it's definitely fulfilling a legal obligation, legal mandate by the German government.
Can I come back on 2 points here, if I may? One of them is the role of whistleblowers. It's very interesting. I think when the history of international taxation at the first 20, 30 years of this century is written, whistleblowers will actually play a very high part, because it was whistleblowers who first identified the aggressive tax planning of some multinationals, which led to parliamentary investigations, which led to questions being asked. There is an interesting issue there about the role of government tax authorities, if it actually takes whistleblowers to bring out some of these issues. There may go back, Marek, to your question earlier about trusting tax administrations or not. But the second comment I wanted to make relates to the Panama Papers. It's very interesting. I'm also a visiting professor at Oxford, and I was teaching the weekend when the Panama Paper revelations came out last autumn. And it was great because I was actually talking about some of those issues with my students, and we were able to look at the newspapers online and discuss that. And the first revelations focused on the corruption and the bribery. It was the senior government officials, it was the ministers, it was the heads of the army who had the accounts. And I said to my students, I bet you that within a couple of weeks, this whole investigation will have been redirected away from corruption and bribery towards tax evasion and tax avoidance instead. Why? Because it seems to me that to a certain extent, governments are willing to ignore bribery and corruption on the part of other governments elsewhere. That's the way they do business in those countries.
Coming back to the solidarity, in a way, there is an international solidarity of the corruption.
Absolutely there. Whereas on the other hand, every government has an interest in protecting tax revenue. And I wasn't wrong that very soon bodies like Tax Justice Network and others were focusing on the tax avoidance aspects of this structure, of these structures, and the Panama Papers were being used as explanations for greater transparency in context of tax matters. That does actually worry me. I think sometimes that we in the tax world we're a soft target. We are, the focus is put on us on avoidance and evasion as a way of deterring examination of other issues and problems.
Markus?
Do both. Don't leave dealing with the one for dealing with the other, I would say. Definitely, that's why we prefer the term secrecy jurisdiction. That's why we have a financial secrecy index, exactly to draw away the attention from purely tax matters and to point out the more systematic abuse aspect these places are selling. Their selling point is the exit, the running away from laws, from the obligations of countries' laws, from places elsewhere, and this is why we call them secrecy jurisdictions. And I think whistleblower releases and protection in European Union is very, very important. But I think it's the crucial point here is that we have protection that even allows whistleblowers, if they expect widespread abuses and crimes being hidden in their files, including very public and powerful figures, that they have a right to go directly to the public and not necessarily only to the authorities. Because we have seen cases in Germany where tax investigators have been put off and have been laid off after they have, for instance, raided the Deutsche Bank in 1999, 2003. There was an affair of tax investigators in Hessen, in the Bundesland of Hessen, in Frankfurt, when they have raided that after the government changed. They stopped that investigation, and they even put 4 investigators under the pretext of psychiatric problems out of business. They have been now rehabilitated after many years, but they are still not back in jobs. It was an incredible smear campaign against those investigators in the tax administration who were investigating the tunnel accounts after Germany introduced a withholding tax in 1993, they had created tunnel accounts from Germany to Luxembourg, to Switzerland, to Gibraltar, and to a number of other places. It was proven more than 20 billion D-Mark at that time of proven tax fraud taking place, and a much higher figure that has never been investigated fully, and the crucial political responsibilities for the people who have been sent off, who have been put off the track and put to psychiatric, you are ill, go away, you cannot work anymore. That has never been cleared so far politically, and this is the kind of problem we are up here. This is very powerful interests who in the end may not, and I don't say it's either state or private entities, both need to be accountable, and the public, the civil society, journalists, NGOs need to hold them to account, and that's why I think we need very strong whistleblower protections for that not to repeat in other places, in other contexts, time and time again.
Markus Meinzer, Phil Baker, thank you very much
Thank you very
for your
much.
participation.
Cheers.